Welcome to Explain the Charts, where we dissect the markets with a keen eye on both news and charts. Today, we're focusing on USDCHF, the US dollar versus the Swiss franc, and analyzing its recent performance, identifying potential turning points, and discussing the likelihood of future price movements. Recent news indicates a slight recovery of the US dollar against the Swiss franc. Several sources point to the US dollar to Swiss franc bouncing back to near 0.8850. Economies.com reported the price breaching the 0.8883 level, suggesting bullish momentum. Let's shift our attention to the one-day chart for USDCHF. We can see a clear upward trend recently, with a consistent increase in the price over the last few days. The recent increase in the past 24 hours has been observed. However, there is also mention of the uptrend being in doubt, with bad omens appearing. This suggests a potential for a reversal or a period of consolidation. Analyzing the candlestick patterns, we notice a few instances of significant price movements which might be relevant. The volume associated with these price changes should also be considered. Now, let's zoom in on the one-hour chart to observe the shorter-term fluctuations. Here, we can see the intraday movements, providing a more granular view of the price action. We can see that the volatility increases at various points in the chart. The one-hour chart reveals a higher frequency of smaller price swings. This might be an indication of increased market volatility or a period of indecision in the market. The high frequency of price changes makes it important to consider the 15-minute chart. This would allow us to examine the most minute changes and help us discover a more granular interpretation of the market's sentiment. Zooming in on specific ranges within the charts reveals interesting patterns and potential support and resistance levels. Focusing on recent weeks allows for easier pattern recognition. For instance, the 0.88 level seems to have acted as support in the past. This level may become crucial again in the coming days, so it is important to pay attention to it. On the other hand, the 0.8950 level has presented resistance in the past. A break above this level might signify strong bullish pressure. Short-term predictions suggest a potential for price fluctuations around 0.88 to 0.89. However, it's vital to acknowledge that these are just possibilities. The current level of volatility is causing uncertainty. In the long term, the market's outlook is heavily dependent on macroeconomic factors like central bank decisions and economic indicators. These things would impact the value of both currencies. Key levels to watch are 0.88 support and 0.8950 resistance. A break above 0.8950 would likely trigger a stronger bullish trend, while a break below 0.88 might suggest a bearish reversal. The probability of this is highly dependent on the news. It is important to note that these predictions are not definitive. Keep an eye on the news and other indicators to reinforce the likelihood of these predictions. Market sentiment will also have an impact. Thank you for watching Explain the Charts. Remember to like, subscribe, and hit that notification bell for more in-depth market analyses.